Welcome back, and buckle up. Today we're visiting the stock that broke the market playbook, and that is GameStop. It's trading quietly, but don't be fooled. Beneath that calm surface, the storm is brewing up again. This meme stock that wants to fight Wall Street might once again be setting up the stage for its next act. This is not just another stock story, it's a clash between retail rebellion and institutions. So without further ado, let's analyze GameStop. Section 1. The short squeeze. Let's start off with the hard data that fuels the meme stock narrative. The entire GME story rests on whether there's enough short side risk to force a violent move upward. As of the last report, there were over 71 million shares sold short. That is a huge amount of capital betting against the stock. Now, the days to cover metric is currently sitting around 8.3 days. This means that if the shorts try to exit their positions all at once, it would take over 8 full trading sessions to buy back those shares. This non-trivial duration indicates that sustained buying pressure could easily trigger a spike. Now, the caveat is that while 16 to 17% of outstanding shares are short, that is really high, but it's not the extreme level that we saw at the historical peak. This suggests that the structural risk is material, but the new buying has been fueled largely by speculation and call option trades, not the fundamental news. Section 2. The $32 warrant dilemma. A recent corporate action has added a massive layer of complexity and risk to the entire situation, the warrant dividend. First of all, GameStop issued warrants to shareholders, allowing them to buy a share at $32 until October 2026. Now, if the stock price rises significantly above $32, the shareholders will exercise these warrants, flooding the market with new shares. This dilution could cap any rally and punish investors who entered late. Now, this is a double-edged sword. And the reason is because for the company, this is a massive win. It's cheap capital that can be used for the transition into digital gaming, but for the stock, it creates a powerful resistance level right above the current price. Section 3. The fundamental paradox. The narrative splits here. Wall Street versus the retail army. First of all, we have the bear case, with traditional analysts remaining highly cautious, with Wedbush has a strong sell rating, with analyst targets as low as $13.50. Their argument is simple. The stock is driven by speculation, and despite minor profit improvements, the top-line revenue continues to decline. We also have the momentum, which is coming from the retail investors, and the high-volume speculation that is seen on social media. This conviction can keep the stock trading in its recent $22 to $25 range and make the stock highly volatile. We also have to take into consideration the liquidity risk, which is adding to the technical complexity. GME has been removed from several major indices. This reduces automatic institutional buying and could make the stock even more susceptible to sudden, dramatic price swings in either direction. Now, after we cover the most recent news on the stock, let's look at the stock chart to analyze where the price may be headed over the next couple of weeks. Now, as you can see, we're on a daily chart of GameStop. And first of all, if we analyze the stock even closer, we see that the stock has been overall in a very consolidated zone. We have an overall range from here for the price of $34 all the way towards this low here of around $19.77. We have been overall just coming up and bouncing and coming up and bouncing. So pretty much what we're doing here is that we are pretty much in a bound. We cannot seem to break either towards the upside or towards the downside to find lower liquidity at the zones here. So what I can see here from the current daily chart is that we are now below the 50 EMA, which is this overall yellow line on my chart. This does show though that there has been some buying, because even though we did below the 50 EMA, we have been seeing that we've been holding this near area of support here, which is this area here. And like I said, this $21 zone and 92 cents is where buyers have been located over the past couple of weeks. Now, something really important to acknowledge here is that there's been heavy resistance on this name. If we zoom out here on this name towards a weekly chart to get a bigger picture, we can see that from this high that was formed, here we can see on this high that was formed on May 24th of 2021, we saw an anchored VWAP, and every single time we have a rise, this is where we find resistance. Found resistance here, rose again, found resistance there, we rose again, found resistance more recently here on the 12th of May of 2025, and now we are trading below that. So this shows to me that there is a lot of interest and a lot of sellers that want to bring this name down even further. Every single time we have buyers that are picking up the name, there seems to be someone or institution that are just pushing the price down to increase their average short price. Now you may be saying to yourself, well, how can I buy this name, or where do you see this name going? Well, simply here, if this level does not allow itself to be held here, this $22 zone, then I believe that support number one is going to be here at $19.93. Here we can find some lower liquidity. Maybe asking yourself, well, why do you see this level? Well, simply if we look here at, for example, the RSI, we can see here that it's been declining, right? When you're seeing a lower high, so this high is lower than this high, and then this high is lower than this high. So we've been seeing a type of pattern like this, right? Declining lows and lower highs like that, right? Which is pretty much what the price action has been doing over the past couple of weeks. But if we see here that during this time, when this decline does happen, right, we do not hold this level, then we can see something like this where we bottom out here at the RSI and then we start rising up again. This will show that there's underlying strength and that this level is an important support zone here on GME. Now, if the stock does not hold that level and we still keep seeing a lot of aggressive selling, the next area of support would be here at this overall IPO anchored VWAP, which has a price of $14.33 here. Now, the IPO anchored VWAP is anchored ever since the beginning of this overall stock when it was publicly traded. I believe this IPO'd here on the 18th of March of 2002, and this is where we actually came in and found support on the latest sell-off, which was right here. If you can, just zoom in here on my chart, this last sell-off that we had right here on the 13th of May of 2024, that is where we found those buyers that came in and we saw this nice, upside momentum move where, GME was trending for quite a while. So we have to acknowledge that these levels are very important over the course of time here. Now, if that level does not hold, my other level here would be now the low that was formed at that anchor VWAP support, which would be here, right? And that would be the level of $10.19 here on GME. But like we said, if either of these levels hold and we do see upside momentum, we do manage to break up, let's say, this area of resistance, we see some type of, let's say, this level hold here, we capture some liquidity here, we make this a higher high, and we slowly start to rise up, right? So I'm expecting some type of price action that looks like this here on my chart, breaks above, boom, right? So now we're above this zone, and then my first price target would be towards a level of $94.99. That would be my first price target on this stock, because that would be the overall areas of resistance that we are seeing here, this overall area of supply that has been affecting the stock over the past couple of sessions. We can see that level. That would be my first price target. And my second price target is either more bullishness and we get such an immense short squeeze as we saw like in Carvana stock, which was almost bankrupt and now is at triple digits here. Then I believe the stock can go towards $185.73. Obviously, this does depend if there is enough short squeeze potential on this name and any positive news that could happen here from there. Let's say the earnings call or any type of investor that's looking to say, I'm looking to buy more. For example, let's say Roaring Kitty, then this stock could potentially increase and go towards the levels here of $96. And overall, second price target of $185, which would see an overall return from the current price action of 641%. So overall, here's where we stand. GameStop is perfectly coiled with over 71 million shares short in the community of retail traders ready to strike. But the true question is, will the collective power of these retail traders finally force the squeeze past the $32 dilution level, or is a $13.50 price target the inevitable end for the original meme stock? Let me know your prediction in the comment sections below. If you want to follow my pre-market daily analysis on stocks like this, hit the like button, subscribe to the channel, and ring that notification bell. As always, don't let the markets whip you guys out. I'll see you guys on the next one.